Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, April 22nd, 2012. We're going to kick it off today with futures chart, ES. It's pretty obvious the market is struggling at the same area. So the focus on this coming week should very obviously be where these highs are in the futures market. Notice that they're very, very equal over a lot of different days. It's basically 1388 to 1390. If you look at these highs like this, you can see here 13, that's 86 and a quarter, and then here is 88.50. This one here is 88.75, and this one here is 90. This is 1390. So 1388 to 1390 is going to be very, very key to see if the market can get over that level. It feels to me like it's relatively tired. What I wanted to show you is this snapshot here of the profile showing this sort of struggle at this same area. We have essentially a profile here that is looking somewhat tired, and one of the ways you can tell if a market is tired is that it fails to make an excess high. So an excess high basically is when you have like a spike. And unfortunately, I can't show you more of this profile because I don't have it on this machine. This is just a snapshot that I took on Friday before I left the office, and I took it with me. I have it on the laptop here. And basically an excess is when you have like a tail of a few of these TPO prints or small volume sort of tail going up or down. And what it does is it completes the profile. And if we look at the profile here over the last 4 trading days, you can see that we have, this is what's known as a poor high. It's an unsecured high. A more secure high is one where you have an elongation of the profile on either side. You'd have like more balance like this, and then you'd have some elongation to the top and elongation to the bottom, right? So notice that there's a top put in here, but there's no elongation. There's no single prints going up here. And then the same exact thing happened here, which was on Friday, right? You had most of the value in the same area, and yet again, another what's called a poor high. It's an unsecured high. So essentially, there's 2 ways you can look at this. You can think that a poor high is one that needs to be repaired. Okay, and when I say that the structure needs to be repaired, it means that in subsequent sessions, the futures market will rally higher than where the poor high was, and it'll sort of put in that tail, even though the tail is not going to be connected to this price action. It would be here on the next day. That's called repair. It repairs the profile. My take on this is that that should have already happened, is that we should have already seen repair. This was essentially a poor high. The next day, the market stayed inside of value, and actually the point of control, which are the black lines, were the biggest amount of volume, it migrated lower. And then the next day, the point of control migrated lower, right? And then the next day after that, which is Friday, the point of control migrated higher, but it's hard to really say, right? I mean, really, this is not any more of a POC than this is or this is, really just a tiny bit. So you really have like kind of 2 or 3 distributions here, I would say, that are all lumped together. And Dalton, who is sort of the father of all this stuff, he always teaches that you treat these distributions as separate days. So, but that's really not all that relevant in the context of what I'm saying here. That's just a little extra piece of information that I want to give you, that when you see profiles like this, you can, and you're day trading the next day, you want to look at them as separate days. But regardless of that, remember what I was saying about the excess highs. So basically, we've had a chance here to repair, and we have not. And then value has really migrated lower. If you look at it, right, here's value area low here. Here's a balanced day, which is inside of the value. Then the value area moved lower, and then here the value area did not make a lower low, but failed to move higher, right? And look at the value area high here. Friday's action really couldn't take the futures out of Thursday's value area. This is Thursday, this is Friday. So what I'm thinking is that the other outcome of a poor or unsecured high is what is happening here. And the other outcome is that it's a sign that the market is tired, because what it is you have value being built at high ends of ranges, but basically the bulls are not getting anything for it. Right? You can think of it that way, that people that are buying at high ends of ranges, and there obviously are people buying, because look at this, right? All these, there was volume here, and the point of control migrated higher, so buyers were in control in this session. But the ones that bought up here, and we know there's a lot of them because the profile is fat, they didn't really get paid for their actions yet. They're still waiting. And certainly the action on Friday, they didn't get paid either, because these people here at the high end of value, they're not getting anything for it thus yet. So that sometimes leads to liquidation break to the downside, so we shall see. So coming into this week, knowing that we've got equal highs where the market is struggling, I'm going to be keying in on that 88 to 90. And don't forget, I mean, right now with the market sitting where it is, especially notice that Friday's close is here in the middle, and this is a range here from roughly this 53, 54 to 90. You're really kind of in the middle of it in 75. So I'm not really saying either way that I think it's going to break down to the upside or, break up to the upside or break down to the downside. But if it does, I'm going to be ready in this coming week because I do think that the move is going to be playable and it should have some momentum behind it. So on the downside, we obviously want to be looking at a trend line break. I would connect these two, right? We've had a lot of instances during the entire week in the same exact way that we've bumped our head in same areas at the highs. We've essentially bumped our head in same areas at the lows, and the market has refused to go lower. It's actually making higher lows, which would certainly be a feather in the cap for the bulls. You could look at it that way. But to me, my outlook is really neutral here, and I'm going to let the market tell me what the next move is. Movement below this 1360, I think would be a relatively strong signal that the market does want to make another leg lower. And at that point, I would be targeting these prior lows here at the 1331 at the last pullback area. And of course, then if there's momentum to the upside, I would be thinking that all of that sort of pent up value that I just showed you should be enough to push the market higher, right? If I had to be a betting man and place my bet now, however, I will leave you with the fact that I would think down. Like if I had no choice and I was forced to bet while the market was closed, it feels to me like the action in the profile is showing that the market is tired, that it needs a little bit more correction before it can make another up leg. And like I was saying before, basically because of the structure of the profile here, where I see the way that the POCs are migrating a bit down, and the fact that the value is overlapping, so the market is really not really going anywhere, but it just, looking at the fact that we came down to strong trend line support, I would have been thinking that the market would have rallied more than that since then, right? And since then, it's just been a very consolidated, balanced action, as opposed to prior pullbacks in the market that we can see here, such as this move down here, very strong, initiated the trend line here. Here's the anchor, and then started it, rallied hard. When we came in the next time, we didn't even make it to the trend line. We came in the next time, we definitely didn't even make it to the trend line. I mean, there's just been constantly responsive buyers jumping in all the time, right? Responding to lower prices and immediately pushing the market out of it. And here we just have essentially not only responsive buyers at the lows, right? They're certainly buying it, but we're starting to see responsive sellers. Obviously, responsive sellers are in effect here, which they haven't been before, because they're hammering prices back down to the low of the range every single time that price rises. That's called responsive action versus initiative action. This is initiative action, meaning you initiate a new move and it just keeps going, going, going. Responsive is when you go back and forth inside of a range and you have buyers responding to lower prices here saying, oh, I want it. But at the same time, you have responsive sellers at the high end of the range throwing it back. And this is certainly the first time in a while that we've seen that. So coming into the next week, I want you to keep all of that in mind. All right. Quick inter-analysis of the majors. We'll just look at SPX and Dow and everything and all that. Same thing on the S&P. Obviously, that's going to be a similar chart to the ES, but again, riding the rail here of the upside of the trend line and not able to make it higher. Friday's action was a topping tail. So again, definitely looking a little bit tired to me. DJI. Oops. Let's get that up. DJI. Dow. A little bit stronger, but remember that we're in the middle of earnings season, so this is due to earnings. You only have 30 stocks in there, so a good report by a couple names pushes a little bit higher, so obviously it's going to hold up a bit better. And NASDAQ is definitely looking a little bit weaker, right? Notice that Friday's action, NASDAQ took it lower, much, much lower. Now, why is that? Obviously, that is due to Apple, which is the next topic of discussion. The most anticipated earnings report definitely of the quarter, possibly of the whole year, is going to be this stock. If you haven't heard of it, it's called Alpha Alpha Papa Lima. They make like phones and stuff. I don't know if you've seen their stuff around. It's usually like shiny and black and silver and stuff like that. Apple is doing something different here than usual in that it's selling off ahead of its number. The numbers are going to come on Tuesday after the close. And usually you have rally into the numbers and then either a further gap up or sideways, whatever. Here you have Apple selling off into the numbers. My game plan for Apple in the coming week is going to be to wait for Tuesday. I will be day trading it before then. It's got some good momentum lately for intraday stuff. But I will be waiting for the action on Tuesday evening, and on Wednesday there should be a large gap in Apple either way. And my prognosis is that the gap will basically not follow through. It will probably be large in either direction and won't follow through, and there will be some opportunity there for back ratio spread or broken wing butterfly in options in order to capture that premium. And it should kind of crush out of there once the number's out. One thing that I've been watching very closely in the stock is the test of the 50-period moving average, which is the red line. It's the first time that we've been to the 50 in a while since the stock really got on a tear from the 400 level. And I'm going to be watching this closely on Monday. Usually the 50 acts as support. If we start to break through that, I think that's quite bearish actually for the stock, because I'm really expecting that players are going to be snapping it up at the 50-period moving average. So we shall see. If we open, flat on Monday and aren't able to pierce this line, I would think that there could be a decent day trade to the upside. And Tuesday during the day as well. And then after that, try not to be long or short of the stock going into the number, because it's probably going to be pretty explosive. All right. Beyond that, that's about all I have, except I do want to leave you with a look at gold and silver. I was looking at some charts here, and I found it very interesting the way that, because I haven't really looked at gold for a while. Obviously, I was talking about it a lot in 2011, and it hasn't really been in play in 2012 at all. Those of you that follow my stuff on the forum, there's a thread there about gold, and I've been basically saying the same thing for a while now, that there's just no play here. There's no play. I'm not interested. It's absolutely no play. I'm wondering, however, if there could be a play soon, because this sort of lack of interest in the yellow metal is really the best thing that could happen, right, for traders, I would say, because generally that's when you're going to start to get a creep upwards, and then, of course, the world is going to notice it when it's way too late. So the same exact long-term weekly trend line that I've talked about for a while, where I said that when gold sold off to here, it didn't rally hard enough or make a new high because it didn't correct enough. And then it did it again here. Once again, it was essentially a double bottom from here. And again, it didn't rally enough, or it didn't correct enough to rally from a sound base. Well, now, once again, you're in this very slow drift down. And interestingly enough, look at the tone of the weekly bars compared to the tone of the weekly bars on the prior sell-offs. Big emotion, right? And here it's just kind of a couple big bars here, but doji, bottoming tail, bullish actually. Here at the 50 MA weekly, little support. 2 weeks in a row of doji, no price action. Then a push lower, but notice here, when you push lower, the weekly bar doesn't even close below this prior swing low. It actually rallies back up, and then doji, small body candle, and then small body candle again to the downside. So what's my thought? A little bit lower, and as this line catches up, I will buy some gold contracts, because I have a very defined risk, which I think will be small. I'll keep it tight. I won't allow it to go very much against me under the trend line, and if there's a larger playable move here, then I will have a very good entry. Something to think about, all right? But obviously not time yet. I need to see that line catch up. SI is also interesting. These are silver futures. Notice that they have also flattened out completely in this $1 range after failing to go lower here and here. So could also be something, but I would wait. I would wait to let gold be the signal there off of that trend line. And then, like I said, there could be a trade to the upside. And one of the things, as I said earlier, that I like about it the most is the fact that nobody cares. That's really important. Nobody's paying any attention anymore, because it's not doing anything. It's not in the news. It's not really going up like crazy anymore. But you know what? It's not going down very much either. So possible trade idea there. All right. That's it. Have a great week. Remember, Apple reports on Tuesday. Oh, we also have a Fed meeting coming up early this week. So FOMC decision on rates. That should be something as well, although probably not going to be a market mover unless we hear some change in tone from the boys and girls at the Fed, but I'm not expecting much. On behalf of myself and the entire ShadowTrader team, as always, here in beautiful and sunny Philadelphia, Pennsylvania, I wish you good trading and good night.